Hey, everybody. Chuck Barone here on Thursday, August the 8th, 2024. Just in the nick of time. The chat's just getting a little bit crazy now. Oh, my. Anyway, take a second. Welcome everybody to the show, everybody to the chat. All my friends on there being silly today, making me laugh. And as always, guys, thank you so much for your support. We appreciate you guys keeping the show going. We're fighting the good fight here. I try to bring you guys really good information every day without all the bullshit, without all the hype, without the clickbait bullshit titles. I don't know. Maybe I start thinking sometimes that I could create those pretty easily. But when I do, all my regulars are like, what the hell, Chuck? So I'd rather make you guys happy and have a smaller audience than reach out and try to get the hysteria in my game. I try to keep it real here, where with real sensible advice, without all the doom and without all the crazy that everybody else seems to be thinking is going to happen any friggin' minute or has already happened. It's amazing, though. They say even a broken clock is right twice a day. And a lot of these guys seem to be that way. How long have they been predicting this doom any second now? Like for friggin' years. I guess sooner or later, doom will come and these guys will be right, but not today. Anyway, let's talk about these markets today. You saw what happened today, guys? Okay, so last Friday, we got the jobs report, which showed a really pretty weak number, about 115,000 jobs. They were expecting like 175. We've been consistently getting over 200,000 jobs. Well, now the jobs report was a huge disappointment, and guess what? Market blew up. Everybody was scared. Okay, here comes the recession we've all been waiting for. Blobbity, bobbity, beepity, boppity, boop, beep. Now, Thursday, guess what? It's pretty much right back to where it was. The jobs report is still got, left of bruises, I guess, but it didn't blow the market up completely. I think the thing that's going to have blown this market up, guys, is these bond auctions, man. Just crazy what the Treasury's trying to do. They're going to destroy this bond market. They're going to test just exactly how far they can go, apparently. But anyway, I can really ramble today, but I got a lot of stuff to talk about. So let's get into these markets today. What happened today? Okay, so jobless claims came today under the number they were expecting, down pretty nicely from last week's number. So the market blows up, goes crazy. Okay, good. They were hoping we were not going to get a terrible jobs report. We didn't. Great. Markets rally like crazy. Dow Jones up 683 points. 39,446. NASDAQ up 464 points, 16,660. S&P 500 up 119 points, 5,319. Guys, this is a huge, huge rally. I think it pretty much pulls everything pretty close to where it was before all the jobs brouhaha got going. But it really has changed some stuff in these markets like futures, on where we're going with rate cuts. Traders now betting differently than they were. People actually believing we're going to get a half a point rate cut in September. I seriously doubt they're going to do that during an election. But today was a great day for the stock market and a great day for all of us, I guess, guys, because we do not need a giant market crash. We just don't need that. Not that I'm hoping against hope it won't happen. I'm not, I'm a realist here, but earnings are what drives stocks. I had a client or a viewer on talking to me the other day saying, well, you were wrong. You said it looks like a recession coming. I said, well, it's not exactly what I said. What I said was, is if earnings blow up, because that's what's holding the stock market up, guys. Earnings have been coming in, even though there's been some disappointments. For the most part, earnings have been pretty steady, and that's what's keeping this market going. So obviously a recession, if they know a recession's coming, they know earnings are going down. They can get in front of those earnings going down, but the market not showing that. So stocks up. Bond market, though, not a great day. Although they didn't really like see a giant spike in yields. Yields were up and everything's back up over 4% now. So now you got the 10-year was up 3 basis points, sitting at 4% even. 4% on the 10-year. The 2-year also up 3 basis points, now sitting at 4.03. So now you got basically 3 basis points in the inversion. That's going away, guys. Now, whether we get the recession that it ordinarily predicts and is usually right about, well, we'll see. I think that having these yields back over 4% is not good news for the bond market. These yields, though, guys, have come down so much already. I mean, it was just a short time ago. Both of these were 4.5-ish, right? We were talking about maybe a 5% on the 10-year, remember? Now they were under 4%. The bond market's just whip-sawing all over the place. Really hard to get a gauge on where the hell. And the Treasury not helping. Today, the Treasury was in the market again, $25 billion in 30-year Treasury bonds. Very weakly received. Had to raise rates again. I did not get the report on what the hold was for the dealers. We know yesterday they had to hold almost 18% of it, which sucks when they were doing 40 billion. They're talking about $8 billion or $7 billion worth of bonds they couldn't sell. Now today they're back in the market with another 25 billion. If the hold was on those was another 20% or so, now you're looking at another 5 billion. Guys, the Treasury is going to single-handedly destroy this bond market. There's a lot of money to invest in assets like the Treasury bonds, but it's not an infinite amount like they seem to believe it is. I mean, we're talking 65 billion freaking dollars just in the last 2 days. And that's only for treasuries. That doesn't include any other bonds. That doesn't include corporates. That doesn't include municipals. It doesn't include all the rest of this stuff, right? So this bond market, guys, what you're going to see is the Fed's going to start cutting rates, and you're going to see this 2-year hold steady or go down a little, and you're going to see a gigantic spike in 10 years and further out as the long-term rates shoot up with this Treasury auctions and this Treasury thing going on. It's just a friggin' disaster. The dollar today rallies up 14 basis points, sitting at 103.23. So the dollar getting back in the pocket. Around 104 is where it seems to have been wanting to trade. We'll see if it can get back up in that range. It had a pretty big hit. Looked like it could go under 102. So nice to see the dollar rallying back up. Precious metals had a good day today too, which is kind of weird with the dollar going back up, but gold rallies today up $40.10, sitting at $2,424.50 for an ounce of gold. Silver rallies up 83 cents, $27.53 for an ounce of silver. I like where gold is. Need to see silver catch it up, guys. We need to get to that 30 again and get over and above that, right? Need to get that together. Oil today up 86 cents per barrel, now up over $76, $76.09 for a barrel of West Texas Intermediate. There's nothing really changed in the market that I've seen. There's no wow, incredible demand. I think this is just trading. So we'll see. I think, as I've said a million Brazilian times, we need to 70 to 75 is where we're going to see oil want to stay. Bitcoin today rallies up $4,599 last time I looked, $59,419. So Bitcoin rallying back up. Hopefully, I'm sure we got a comment on there. So it's almost 61. So it's still rallying. I know their market is at different hours than the stock market. But Bitcoin looks like it's got the bounce from about 54 where it was. Now it needs to get above 60 and hold it. We'll see if it can. All right, so let's talk about what we need to know today. Jobless claims came in. That was what everybody was waiting for. Calm the markets down a little bit. We got 233,000 this week, down from 250,000 last week. Analysts were thinking about 240,000, so they beat that estimate. So the market breathes a big sigh of relief. If this would have been a big miss, wow, the market would have really freaked out. We would have seen what a down day looked like. Now, lots of bets, though, over the past few days on the Fed cutting interest rates in September. And now the bet is 50 basis points. So that was up to a 70% probability on the futures market, right? Now that probability is down to 58%, but the majority of options traders on Fed futures believing we're going to get a half a point cut in September. Again, I got to say, I got my doubts about that in the middle of a close election. You got, so it's slowed. The way this job claims worked, it's really kind of strange because there really are no big layoffs that I'm seeing announced anywhere, but we had those already a while ago. So companies basically not really firing anybody, but now they're not really hiring as many people either. So that's what's slowing down these job gains. So guys, basically the market's hostage to data. That's just basically where it is. So you're going to see some wild ass swings in these markets because the data, like you saw, we got a free demonstration of that over the last week or so when, the jobs were so bad on Friday, bloodbath, boom, Monday, horrible, looked like oh my God, the sky's falling, the party's over. Now here we are at the end of the week. Everything's all better. Guys, it's just going to keep getting crazier. Okay. Now, let me tell you this, guys. It's time to think about maybe adjusting your portfolio or the way you're investing a little bit. Get a little more defensive. And what I would tell you is start to build up some cash. If you have something crappy you need to dump, take your tax loss on that this year, build up some cash. The money you're adding to your portfolio, if you're saving money, be careful investing now. If things go to south and I think we're going to probably end up getting maybe not a terrible recession, but at least a dip in productivity and a dip in GDP here. But if the economy does go south, there's going to be opportunities where you're going to be able to get some stuff at bargain prices, an opportunity to buy low for a change. So I would tell you guys, start stacking some cash if you can, or maybe silver is not a bad play either at these prices because it's going to get at and above $30. Believe that. So that's almost a 10% move from where we are. I think that's very easily doable. But start getting yourself in a position where if the poop does hit the fan, you're able to capitalize on the opportunities that are going to be presented when that does happen. All right, let's talk real estate for a second. Mortgage rates finally starting to come down. Thank you, big guy. It's been so bleak. Rates well above, at or above 7%, even up to 7.5%. Now rates starting to come down around 7.75. It was looking like we were going to get to 6.5 and maybe a little bit lower last week. But thank you, jobs report turned the whole bond market around. Everything went freaking crazy, right? So now rates on mortgages bouncing back up, especially because most mortgages are 30 years, so it's a longer term look we're getting, not the short term stuff, right? Basically, mortgages priced out on the 10-year. So we'll see, guys. It's just good to know that we finally approaching a rate where people can refi down from those astounding 7.25, 7.5, and get down to 6.5, give them some relief on their payment, and maybe another down the road at 5.5 to really cement it and give people a payment they can live with, and maybe even get some new people into this market depending on how prices go. Commercial real estate, the other side of the coin with real estate, we know they've got a big problem. We know they're kind of just trying to keep the lid on that with commercial real estate, especially office buildings. Well, now the contagion leaking into apartments. The cost of everything is so much higher. Apartments have kind of maxed out how much they can raise their rents they're charging everybody. So now they're falling into trouble. Listen to this, guys. $57 billion worth of apartments are now at risk of being in distress, not making payments. Commercial real estate, the office side of commercial real estate, the office buildings already have $40 billion that is distressed, not at risk of distress. And they have another 60 billion at risk of distress. If all of this stuff goes in the crapper, if we really have a deep recession, guys, regional banks really, really going to have a tough time, because just what we're already looking at, you're looking at $150 billion in losses. And you're going to, what are they secured by? Real estate that's going to get completely obliterated, the values of it. So commercial real estate, the saga of this slow motion disaster goes on. KKR lawsuit. You guys see this? You guys who know who KKR is, right? Kohlberg, Kravis, and Roberts, huge company from back in the day. One of the first real buyout private equity companies. Henry Kravis, a very, very well-known Wall Street guy, philanthropist, art guy. He's got an art collection. I guess it's worth friggin', almost $1 billion freaking dollars. Him and his partner, George Roberts, when they gave up day-to-day control of KKR, the company rewarded these guys with the usual golden parachute crap, right? Here's your stock options money, stock, blah, blah, blah. Well, guess what? Now it turns out that those gifts and that parting gifts that they got are worth $650 million freaking dollars. And the shareholders in KKR are like, screw that. They're suing to try to get that $650 million back, saying that they gave that money up and got nothing of value for it. Guys, this is new stuff, okay? Usually shareholder votes are pretty routine stuff. They proxy and let somebody else vote for them, or they don't even bother turning in their proxy cards. All of a sudden, now you have activists involved in these shareholder things. They went after Musk and his big pay package, going after Kravis, who's a legend on Wall Street, after his big pay package. It looks like shareholders have had enough of all the money going to the top and just a few pennies trickling down to the shareholders. $650 million. Wow. 37% of investors surveyed, I guess they did a big survey, 37% of investors say they are bearish about the stock market over the next 6 months, feeling like stocks are probably going to come down. The interesting part was 40% still bullish. Well, I guess bullish, these bulls are eternal bulls, right? They don't ever change. 40% bullish, 37% bearish. The average for bears, by the way, since they've been doing this kind of polling way, way, way back in the day, the average is only 30%. So now you're getting more people feeling a little bit bearish about the stock market, which in my mind, I'm not sure exactly how to take that. I would like to see everybody, let's see the bearish number go up to 80%, because then I know for sure it's time for a huge rally. You know my opinion, guys. When the herd is going one way, it's time to go the other way, right? So anyway, there's now the market's kind of about half and half between bulls and bears. Very interesting with all of this stuff going on. Some people seeing it glass half full. Some people seeing the glass half empty. And I was reading this article, very interesting. You guys should take a look at this. Industrial demand for silver could basically completely consume the entire yearly supply that's being produced starting in 2025. So basically all the silver that's going to be produced is going to be used for industrial purposes, not for making coins or bullion bars or anything like that, right? That is going to make silver go up crazy. Silver now being used in tech stuff. They're using it for electric vehicles, solar power stuff. There's so many industrial uses for silver now. Guess what, guys? The demand is so high that it could totally consume the entire yearly output. What do you think that would do to demand for investors, man? Wow. So if you're holding silver, you're probably in a pretty good place. And lastly, to wrap things up today, you guys see this tropical storm Debbie, right? Now it's pretty early in the season. It's only a D, so it's early. This storm was basically a hurricane when it hit Florida, Category 1, so not a real smashing hurricane, but still a hurricane, damaging floods. hit Florida, went through Florida, through Georgia, flooding Georgia coast, flooding Charleston, South Carolina. Now it goes out to the ocean, picks up some steam in the warm waters off the coast, smashes back into South Carolina, and now it's heading north, dropping just tons and tons of rain. Looks like it could go all the way up to friggin' Maine. Now, guys, this is something new that we haven't. Usually when a hurricane hits, it's not going to travel from south of Florida all the way up to Maine. Okay, this is something new. And I don't really talk, I'm not talking about this, talk about the climate or anything like that. What I'm talking about is the insurance crisis we're having, guys. Florida's already smashed to smithereens with insurance premiums. Now, if these storms start to continue to do this stuff, guess what, man? These insurance premiums, it's going to be where people are not going to be able to build houses in certain areas that are in the path of these storms that seem to be getting more and more and more regular. So get ready, guys. If you're in one of these areas, Florida, Texas, along the Gulf Coast, now even the East Coast, also, of course, California with their fires, and a few other places where insurance premiums are going completely through the friggin' roof. You're not going to get much relief, guys. These storms are going to keep coming. Hopefully, maybe we'll get a break one year and they don't. And everybody can kind of take a sigh of relief, and maybe we get a break for a couple of years where they don't. You know, when I lived in South Florida, Hurricane Andrew hit in '93, I think it was. It was the first hurricane to actually hit Florida in almost 50 years. We used to go to the beach and party our brains out. Of hurricane parties, they used to call them. Hurricane warning would go up, everybody head to the beach and party. Now Florida gets hit every friggin' year, guys. Louisiana, man, going to be tough to insure property in South Louisiana along the Gulf. So anyway, get ready for more of that madness. Anyway, guys, that's it for the day. Of course, I'm running over because I'm a friggin' windbag. Appreciate your guys' support. Love every single one of you. Thank you, everybody on the chat today. You guys keep me amusing. It's fun to watch you guys in your comments. Please hit the thumbs up, the like button, guys. It changes the algorithm around, gets that video out in front of a few people. I need your help, guys. Help me out. I will be back tomorrow to bring you the news you need. I will be on comments later today. Hit me up there with questions, or if you got a funny joke or you just want to say hello. Until tomorrow, everybody. Take care. Thanks.